Hey guys, welcome back to another episode of The Upside. Today we're talking to Gabriel Jarrosson, the founding partner at Lobster Capital, a VC fund with a very unusual thesis. He only backs or invests in Y Combinator companies. Gabriel's journey is anything but conventional. Frustrated by the lack of access to promising startups in France, Gabriel launched a YouTube channel in 2017 and started sharing his investment journey. That channel grew into one of Europe's largest angel syndicates and eventually into Lobster Capital, which is now raising its second fund in 3 years. So Gabriel uses podcast and social media not to only share insights, but also to gain access to some of the hottest YC startups globally. In this episode, we'll dive into his investment strategy, the power of content as, deal flow, and how he's getting into YC deals early, especially in today's fast-moving AI wave. Let's get into it. Hi, Gabriel. Nice to meet you.
Nice to meet you as well. Thank you so much for having me on the show. I'm very excited.
Thanks for coming on the show. You have your own podcast, right? So it's a privilege for me to have you on mine. And just before we get into any background story, right? Your firm, Lobster Capital, right, is a YC only fund, yeah. Why do you believe narrowing in on just YC startups, right, gives you a better edge than broader seed or pre-seed strategy that other firms take?
Yeah, sure. it is unconventional. It is what I chose. So there's several things, as you mentioned, and I think we might get back to this, but I started investing in France, and I quickly realized, or after a few years, maybe not so quickly, realized that if I wanted to invest in tech startups, France was not the best place to invest. Suddenly I realized, well, I can speak English. Everyone knows that the tech giants, they all come from the same place. It's Silicon Valley. So I thought to myself, I'm just going to come here and see if I find those tech giants. And in Silicon Valley, so I was in this mindset of finding the best deal flow possible. And so when I was here in SF, I kept asking people, what's the best deal flow? Where can I find the best Silicon Valley startups? And this name kept coming back, YC. And so my purpose is not to pretend or to say that only YC can create great companies. That's obviously not true. We have many other examples of amazing companies that have been created outside of YC, like Google, like Facebook, like SpaceX. There's a large amount. But I'm an engineer originally, and so I like to think in odds. And of course, if you want to invest in a unicorn, your odds are better in Silicon Valley than in France, for example. And so if you look at the odds of becoming a unicorn, one of the best place in the world is Y Combinator, because every YC company has 6.5% chance of becoming a unicorn. Or if you say it in another way, out of all the companies that YC help or invest into, 6.5% of them end up becoming unicorn. So because the odds are greater, then I believe my fund will have greater odds of having unicorns, and so better performance overall, hopefully. So that's why I chose this. Again, my point is not to say that everything outside of YC is bad. That's not true. But it's just, this is where I think I have the best odds of succeeding and, as a fund, returning the most money to my investors.
Well, that makes a lot of sense. However, you would agree that some critics would say waiting for YC signals a lack of conviction, right? How do you respond to that perception?
In a sense, I could agree. I could say, yes, it's true. If you have a very talented, a very young, ambitious founder, and you have the conviction, and you can back that person. Tim Draper, a famous investor here, said to me that when I explained to him my strategy, he said, "Oh, this is kind of lazy." So it's going back to what you just said. But then he added, "Oh, but it's also brilliant." And so, maybe people could say it lacks conviction. If my fund performs the way I think it will, I don't care about the critics, in a sense. And people, it's very interesting in this seed world that I live in now. Almost everyone thinks they're smarter, thinks they have they have a vision. People fall in love with the project. People fall in love with the founder, and they try to convince you, oh my God, like this company is going to explode. It's the next unicorn. And then what happens 5-10 years? Almost always it does not happen. Even people who've backed unicorns before, and then they fall in love with the next thing, and the next thing does not become a unicorn. So I would actually much rather have maybe less conviction and more results than to just fall in love with the idea, fall in love with the founder. But after 10 years, remember, it's a very weird game that we're playing because we put money on the line, but we get the answer 10 years in the future. So YC has the track record. It's been around for more than 20 years now. We know it backs the best founders and creates the best founders. Actually, arguably, the results of YC in the future are probably going to be even better. But even if they stay what they are, we know it's a very good bet. Again, I'm a very practical person. I think in terms of odds. So maybe I don't have conviction, and that's why I think we're going to talk about this as well. That's why I back founders with strong early traction, because I don't want to have to think of whether or not this is going to work. I want the market to tell me if this is going to work or not, if they like it. So if it's an idea that I hate, but there's very strong early traction and clearly the market loves it, then I want to invest. And on the other side, I've seen so many investors, and I see it because I talk to my fellow YC co-investors. They say, oh, but this is such a great idea and a great team. Yes, but they haven't gotten any traction. They haven't sold anything. So are we sure there's product market fit? Are we sure they're going to be the ones to build it? No, we're not. So sometimes this works out, and then it's really sort of gambling in a sense. And I take a more systematic approach of really looking at the numbers and putting aside what I personally think.
Okay. You made two comments I want to kind of touch on, right? I think the first one was that the current crop of YC companies are most likely going to do better than the previous batch. So I'm thinking like you pre-Jarrisson and post-Jarrisson, right? And for me, Jarrisson brought in, he kind of, he is leading this new AI wave of startups, right? Coming to the accelerator and more US-centric companies, right? So I think, the best performing companies from YC have always been the US, right? But they've also had like, big wins, right? Outside of Silicon Valley, right? But becoming more US centric, right? Doesn't that kind of, I don't know, reduces the opportunity that, these companies can go after, because everyone is like, just targeting the US market and businesses. And secondly, just to tie into something else you mentioned about like, early traction. Right? And for me, most of the AI companies, are ARR, right? So it's like projected revenue. And I think you've seen the debates, social media or like the news about some of this, ARR being, will I say, just, companies signing up or like users signing up for just a year to try out the product and churn later, right? So it's like, what's the probability that these companies will actually maintain this traction over the coming years when it's harder, like, when there's more competition in the spaces they're playing, or if, for instance, the tech doesn't work as it should, right? And, companies start to churn. So it's like the two questions are kind of linked together. Like, is it a guarantee that the current AI companies that we have right now in the YC batch are actually going to outperform pre-AI companies, right? Software, SaaS companies that we've had pre-Jarrisson. The early traction you talked about, is that really like an indicative, measure to see these companies would perform in the future?
Yeah, that's an amazing question that I get asked all the time. I'll answer the first question on, is it good to only focus on US companies, and are we limiting ourselves, or is YC limiting themselves? I think San Francisco plays like a magnet to attract talent. That's one of the reasons that I like to invest in San Francisco. Is I invest in people from all around the world. I invest from people from France like me, from Nigeria like you, from every single country there is, because it attracts talent. And that's why I came here as well. It attracted me. I don't know if I'm as talented as YC founders, but I didn't want to stay in Paris. I wanted to, go to some place where I could really build what I wanted. So that's the first thing. It doesn't mean companies only focus on the US market. The big tech giants are global, but they're based here. Facebook is used in every country in the world, but they're building from here because they can also hire the best talents, and they have lots of positive things of being here. So that's the first question. I think it makes sense. I think you can build better, faster here with more talent. You have more funding and more capital. And again, you can target a global market. So hopefully that's not, cutting them or depraving them of anything. On the traction part, now the really important question. It's true that sometimes the early revenue is not sustainable. There's obviously, when I invest in a company, you don't just look at the revenue number. You look at the cohorts and you look at the churn and you look how it's evolving over time. And different revenues can tell you like the same number, but different metrics inside can tell you different stories. So that's really something to be careful of and to think about. It does happen that companies go up very quickly and then go down as quickly. That being said, even if you take churn into consideration, so I think we'll get to this as well. I'm a 7-time founder, right? I've started many businesses. And one of the most difficult thing to do as a founder is to actually get people to care about what you're building, get people to sign up, get people to pay. I remember my very first startup, I was extremely young and naive. I thought you publish the website and it's crazy. Everyone goes to your website. You're a millionaire. I thought the hard work was to build the website. And then you publish the website and that was it. Obviously, I was so wrong. I published my very first website. I was probably 18 or 19 and then crickets. There's nothing happening. No one cares about you. That's true for almost everyone. So just setting aside the churn part, and the churn is important. You don't want churn, obviously, but already having people sign up and making hundreds of thousands, if not millions of dollars in revenue is already exceptional. Many people, many entrepreneurs, even in Silicon Valley, would dream of making their first million in revenue, let alone, let's focus on the churn later. So that's one thing. So even if there's churn, hopefully churn can be addressed, churn can be diminished. They can build. So I have a portfolio company exactly like this, AI product, very large growth. And now they're lacking some functionalities. And so people are churning. It's this very case. They're super busy building those features so people retain. But what's interesting is once they fix the leaky bucket, they still have the growth engine that allowed them, when I invested, they went from 0 to 3 million in like 4 months, which is insane. So now they're fixing everything, right? And then they're going to open the floodgates again, which they know how to do. And that's the hard part, honestly. Building is kind of easy. You just hire a bunch of engineers, you tell them what to build, and they do it. Once they open the floodgates again, then they can go from 3 to 6 to 9 to 12 with retention. So again, some things to consider and think about. It's not great to have churn. You don't want churn on purpose, but it's also something you can address. And it's also not the hardest part, the retention. It is hard, but the hardest part is also acquiring customers. Does that make sense?
Yeah, I think that makes a lot of sense. And I actually wanted to ask, right, your strategy in investing in AI companies, right, from 2023, and before that, I understand you were focused on B2B SaaS, right? I mean, you can again correct me if I'm wrong. I don't know if the other industries you were focused on, right? But what I know is B2B SaaS and AI, right? How would you describe the kind of the growth that the companies, right, in these two different industries you're seeing from your portfolio companies? Is there a way where, some of these B2B SaaS companies are embracing AI to become, better, or these AI companies, get into territories of the B2B SaaS companies and dominating, across
So I've always been a generalist. So before AI, I was in generalist. So I've done obviously a lot of B2B SaaS because it's very cool thing to invest into. But I've done some B2C. I've done lots of different businesses. Historically, I did little hardware, but now I'm getting more and more into it for the last few years and really liking it, enjoying it. There's lots of things that need to be built in the US, and I'm investing in some of those critical things that really need to happen here in the US. So I'm very happy with that, and it's going well. I think the frontier between AI and not AI company is very thin. There's almost no entrepreneur that would tell you, "Oh, I'm not using AI in my business," right? And so if you're using AI, are you an AI company or not? All of these pre-AI investments, those 2020, 2021, 22, now they're using AI heavily for everything they do. So did they become an AI company? So the distinction of before and after is not huge. Maybe after 2023 or starting 2020, it's maybe AI native. So from the very beginning, from the ground up. But what I can tell you, what I've seen, and we see this in the YC batches as well, is AI is accelerating everything. It's accelerating companies. When you're in YC, you need to do two things. You need to build, and then you need to sell. And then there's demo day, and hopefully you've sold a lot at demo day to impress investors. So before, it used to be you build for 2 months, you build like crazy, and then the last month you try to sell. Today with AI, vibe coding or even just AI assisted coding, you can have a prototype in 1 or 2 weeks. Then you have 2.5 months to sell. Then with AI, you can say, hey, find me my leads. Already send a bunch of emails to them and book me some meetings. And you can have an AI booking you 20 meetings a day to try to sell. And of course, on the call, it's still going to be you, the founder. But just to say, it goes so much faster. So AI is accelerating everything. By the way, we are in a big illiquidity phase right now, but I think AI is going to bring this down as well because companies go faster. So I made a video on this. I think, the exit time is going to go back to 8 years, maybe 6 years, when today it's 10, 12 plus. So that's good for everyone, for investors, for LPs, for funds. That's also being accelerated by
secondaries or acquisitions and IPO as well.
Yeah, that's what I think. So secondaries are big because there's no IPO and acquisitions anymore. But I think we're going to get back to acquisitions and IPOs because I think just companies are going to get to critical mass faster. Because again, you build faster, you sell faster. Maybe there's going to be, I'm sure there already is a lot of AI tools to research the right company to acquire, to put more people in touch. So yeah, I think all of this is going to happen much faster into the future. And so, pre-AI, post-AI, I think the entire cycle is accelerating. I think that's a great thing. And YC is part of this. And you see the batches. Now it's been, I think, 3 batches in a row that the batch beats the record of revenue for any YC batch. There's been 20 years of YC, 2 batches per year. So 45, 50 total batches. And then they beat the revenue record. And then the next batch beat it again. And then the next batch beat it again. So clearly something is happening. And that's batch wide with all the startups here. And I think the batch now grow on average 10% per week, on average for 3 months. That's insane. That's crazy. So we're entering a brand new world of startups. And I'm so excited to be investing there right now, because I think the startups we're investing now, again, imagine if the time to exit from the 2025 investments are 6 years. The funds that invest now are going to have such amazing performances.
Yeah.
And quickly. And then imagine YC is better than 6.5%, which is my personal thought. Again, a YC specific fund is going to have amazing returns. So I'm not advertising my fund here. I'm not being like, hey, come into Lobster, blah, blah, blah. I'm just saying that's what I truly believe. And that's why I chose this. I want to build an extremely, a super high performing fund. That's why I'm doing this.
And I mean, doing that and trying to get into these deals, right? It's very competitive, I imagine.
Yes.
Cool. I'm trying not to butcher her last name. Is it Wiskov? Nicole Wiskov or Wiskov Ventures. I think a couple of months back, just comparing the non-YC startup at early stage versus the YC company. And I think the valuation getting into the YC was, I think, 1.5 times the non-YC company. And Gary had to chime in and say, oh yeah, it's because of this, because of that, revenue, blah, blah, blah. 0.5% of the startups in YC batches are unicorns and all that kind of stuff. And so I imagine it's very competitive to get, those deals. What's kind of your playbook for building early access, right? And getting at the sweet spot where it's not too pricey for Lobster and it makes sense, in the long run when there's a return.
I'm going to quote David Sachs, founder of Craft Ventures, legendary fund, billionaire, very successful. He said, I'm not a price maker, I'm a price taker. I've struggled with this for so long. Valuations, yes, at YC, they're slightly higher. But when you see a great company raising, the only question you've got to ask yourself is, has this company the potential of becoming a unicorn? And a number we didn't talk about, but 25% of YC unicorns become Deca-Corns, which is worth more than 10 billion. A quarter of them, 25% become Deca-Corns.
So that's 1 in 4 unicorns become Deca-Corns.
From YC, yes.
That's
which is insane. If you think of the VC math, if you think of the returns, unicorn is obviously great for your portfolio. But then if you just 10x from there, I'll take some random numbers. A 50x becomes a 500x. That's completely insane. That's how you get amazing performing funds that return 10, 30, 80 times the total fund, or 200 times. That does happen from time to time. So the only question you got to ask yourself is this company, can this be the next unicorn and the next Deca-Corn? And if it is, it's much better to invest even at a slightly higher valuation. So maybe it's 20 million seed, maybe it's 30 million seed. There's some $40 million seed at YC as well. But if you think it's going to be worth 10 billion, your only other option is to just say no and to just let it go. And so I choose to actually invest. So of course, if I had invested in the same company at 5 million, obviously it's better, but that's not possible. That's not in the realm of the possibilities. So I would, and again, compare with so many VC funds and who say, oh, we have great entry points. They only invest at 5 million.
Yes.
And of course, once in their lifetime of their fund, they might hit a unicorn. And if you invested at 5 million, that's a great return there because you were lucky. It's kind of random, but it's not repeatable at scale. What I do is repeatable because YC attracts, creates those founders. And yes, the multiple is going to be slightly lower, but I'm not going to have it on one startup out of 5 funds. I'm going to have 5, 10 in each fund that end up becoming unicorns or do really well. And so the overall performance is much better, more predictable, but higher overall anyway.
Do you ever think about like, what if, you're the other end of the spectrum where the companies you're backing might not eventually become the winners within the YC batch?
I mean, of course, that's the job. You back companies and you think they're going to do great, and sometimes they don't. That's okay. Every investor has post-mortems, and my job is to think about how I think. So why did I think it would be a winner? Where did I go wrong? How can I adapt into the future? And of course, so that's why you have diversification. So you build a portfolio with a lot of startups. And not all of them work out, but that's part of the job. That's okay. It happened to me before that I backed a company that I thought was going to do great and it collapsed. It happened to me before that I backed a company and then for 2 years, it did nothing. It was horrible. I regretted it. And then it exploded. It happened to me before that I said no to a company which exploded as well. And I could have invested, but I said no. All of these happen to everyone in venture. I've done more than 100 investment in YC startups. I've seen so many startups, so many batches. You have your hits, your misses, you have everything. It's part of life. But what matters is the performance of the fund overall. So far, looks extremely strong, much stronger than most other funds out there. That's what matters, and that's what makes my investors excited.
Can I ask, how many unicorns you have in your portfolio?
Yes, from YC, I started investing in YC since 2020, and so you only count the unicorns that you invested in at seed. Because if you invest at Series A, B, C, obviously it's easier. Minted unicorns that are today worth more than $1 billion that I invested at seed, there's 2, which in 5 years is already, quite impressive. But what's interesting as well is the Soonicorns, I want to call them. So the companies that are valued over $100 million, growing very, very quickly, and that will very, very likely, we don't know for sure, but very likely will become unicorns in the next few years. And so out of those, there's probably 5 to 10 more that can become unicorns maybe in 2-3 years max. So I think those numbers alone are very good. Like I can tell you for sure, if I had stayed investing in Paris, just a guy investing in a bunch of tech startups in Paris, you don't get 2 unicorns from seed in just a few years. So, those numbers are good. Hopefully I want to make them now 10 times bigger.
I mean, talking about like France and Europe, right? Your strategy kind of reminds me of Harry Stebbins, right, of 20 VC. And over the years, we've seen how his content across like social media and YouTube and, podcasting has created or presented deal flow, right, and access. And, it has a $140 million fund now, right? For you, right, how has like, your media presence, right, across social platforms, right? And also, podcasting actually translated into deal flow, right? Do founders like watch your videos or like, come across you on social media and kind of reach out? I mean, how does it work, like using content to access a lot of deal flow?
Yeah, I love Harry Stebbings, raising the biggest European fund, I think 28 years old, pretty impressive. And thank God he's only investing in Europe, so he can leave the US to me. Social media has always been part of me. We touched on it. The syndicate that I built in France, that was I believe the largest European one at some point, was mostly thanks to a YouTube channel in French at the time. And I think YouTube is just a great platform. So anyway, when I thought of Lobster Capital, I really wanted to make this part of the strategy of what I was building. And so you mentioned I have a podcast with YC founders. I have a YouTube channel, and then I have a big presence, very active on X and LinkedIn. And so it does, to answer the question very simply, yes, it works. Founders do know me. Not all of them. It's not 100%. I don't think every founder knows Harry Stebbings, though he might be close. But of course, I'm not as big as him yet. But founders, follow me, know me ahead of time. Sometimes founders, aspiring YC founders, follow my content to learn more about YC. And then they apply to YC, make it to YC, And sometimes I get messages, thank you for all of that content, for helping me along the way, because now I'm in YC because I've been following you. So more and more and more founders, the people who are going to be in YC in 2 years from now, maybe they're already following me today, or hopefully they are. Or if they're not, they're looking online for information around YC and they're going to find me at some point. So that's the beauty of it. People know me from before. Then I can also showcase my founders, my investments on my social media. I can have them on my podcast, obviously, and talk about them on my social media platforms as well. So that's that does help. Of course, it's not the only thing I bring to the table. I'm a founder. I've been helping companies with my experience. I've built 7 startups, and there's the network, the reputation here in Silicon Valley. But yeah, it does work because people know you from before. And also, what's interesting is sort of the cherry on the cake is it also sometimes attracts investors as well. Sometimes potential prospective LPs to my fund, they also find me online and they reach out and they say, hey, so yeah, I think it's great. I'm very happy I'm doing this, and I'm going to keep doing this for quite a while.
That's great. Maybe I'll follow in your footsteps as well.
You should. Absolutely. It's very interesting because everyone knows content is important. Every fund does that. Every fund knows it. Many funds have a podcast, but I don't think they do it really well or really seriously. They don't take it seriously because it takes a lot of time and effort. And it's like, oh, it's just a bunch of people talking and that's it. I chose to treat it very seriously. I chose to put a lot of effort into it. And if you do that, it works out. Many people don't know how, don't have the time, don't have the resources. Again, because it was very important, very, very central for me, I chose to go all in. And yeah, so far it's working out pretty well.
Based off your experience as, a founder, you talked about launching 7, which is a lot, by the way.
Too much.
And also, like, as a YouTuber, it's sharing content first before becoming an angel investor, right? And then a VC, right? Are there some lessons that kept you going, right? Up from that, like being a founder to YouTuber to an angel and VC, right? Across the board, that you still kind of, that still shapes, the VC that you are today, right? When back in, today's founders.
Yeah, absolutely. I mean, so I agree, 7 is a lot, and it's probably too many. I was very ambitious and very excited, and sometimes building 2 or even 3 startups at the same time, which is a bad idea. I don't recommend. I was very young and I guess immature probably, and it's a recipe for disaster. I would say the most important lesson actually is the one about traction. Is the one I talked about earlier. So I won't go back into it, but yes, it is so difficult to get people to show up for your product that, if you find a startup that has done that has traction, it means they've figured something out, whatever it is, they've done it. But yes, actually, all of the lessons from my failures shaped how I invest. That's how I came to investing, is after starting 7 startups, and I sold 3, but in my opinion, they're all failures because even my exits were not big. I'm not pretending they're very, very big exits. So compared to my ambition and where I wanted to take them, it's still failures. And so that's how I came to investing, because I was seeing other founders and I was saying to myself, they're not doing the mistakes that I made. They're somehow better, smarter than me. I made all of those mistakes, but they're navigating better than me. So I think they're going to make it. It was rare. Most people, first time, second time, I know those mistakes. I've done them before. But sometimes you find someone else. So that's how I came to investing. All of the mistakes that I did, all of them, I carry them into my investing philosophy. So, the what I call engineer syndrome, which is building in your cave for 3 years without launching, without talking to your users, without knowing the feedback from the market. That's one of the biggest, failure. Believing if you build it, they will come. What I just talked about. People who say, oh, I've built it. Now I just need to raise some money to market it. I just need some money and then I can sell it. So if I don't raise, I cannot sell. Big mistake. You should find a way to sell as a scrappy founder for free to get initial traction that's going to interest and excite investors. All of those things. Of course, you need grit and perseverance, and it's very difficult, very tough being a founder. You hear no a lot of times. Again, this I learned the hard way. And so you want someone that has a strong enough personality that they're going to, push it the entire way through. All of those things I carry into my investing philosophy. And again, I've been building startups for almost 10 years. So, it's like there's lots of lessons that I learned along the way that I'm bringing with me, lots of things that I see in my fellow entrepreneurs and founders when I talk to them that I can recognize and match some patterns, etc., to make better investment decisions, hopefully.
And still talking about like, stuff you brought from, your previous experience as a founder and YouTuber, right? Does this sound strange calling you a YouTuber? But anyways, I think I wanted to ask, more specifically on the culture or mindset shift, right?
I think I would say the biggest thing probably for me is the speed and the ambition. When I was in France, fundraise, like a round takes usually 3 months. If you're very fast, it's maybe a month. And here in Silicon Valley, it takes 2 weeks. And if you're in YC, it takes 24 to 48 hours or 72 hours. That was the first shock for me. It was so different. And that's great because founders hate fundraising. Everyone tells you everywhere in the world, I just want to go back to running the company and growing the company. But in France, it takes them 3 months of emails and chasing people and negotiating and all that. And in here we have the safe. It's a standard. We just sign it, wire the money, and we go. So that's the first thing. The other thing is the ambition. If you say in France you want to build a $10 billion company, people almost, I think, laugh you out of the room. Like it's ridicule, or, they don't believe you. And here, if you don't say you want to build a, $10 billion company, you're not ambitious enough. So this I really loved. Other than that, I've always, I grew up in France, but I've always studied the US, and I've been watching Shark Tank since I was since season 1. So it's been, I think, 15 or 20 years now or something. I've been always looking at the way startups operate in the US. So I think I had a sense of the US culture. I don't, I'm not sure people are so different than Europe. A few subtle things, like people here, in France, every meeting starts with, "Oh, how's your family? How's your kids?" Like the sort of niceties, which here people don't really care about. They want to go straight to business. I actually appreciate that because it's people don't really care about your kids and your family. It's just like the pleasantries, right? So, but I didn't have to adapt too much. Of course, I like the speed. I like the ambition. That's also why I was attracted to come and build here. So nothing, I think, too difficult for me to adapt to. I think, again, the US, Silicon Valley, is the place that attracts people from all around the world. Ambitious. Like the only religion here, the only skin color, the only ethnicity, the only whatever is ambition and drive. And that's great. The US has many problems, obviously, with immigration. France as well. Like, no country is perfect. But San Francisco, people just, care about your ideas, like what's in your brain. We all have the same brain. So that's something that I really love here, that I don't find in many other places.
Still talking about like speed, right? I also noticed, I mean, it's kind of obvious, right? The go-to markets, or like, the ease of execution, right? Or just like building, shipping stuff, right? In the
Oh,
US,
yeah.
YC is crazy because like every other week, I'm seeing something from YC about like, this startup launching, this is that. Like, it's crazy. Yeah.
I'm not sure. I think it might be from the book on Elon Musk, but it also reminds me of Steve Jobs. I think it's something that I call a maniacal sense of urgency. You need to, there's this thing called the Parkinson's law that says stuff takes as much time as you have allowed for it. So if you say, "Oh, we're going to launch in a month," then the building to launch is actually going to take a month because that's the time you allowed yourself. And then if you say, "We're going to launch in 3 days," people are going to be like, "What? Are you insane?" But actually, people are going to work like crazy. And maybe you launch not in 3 days, in 4 days, because you're a little bit late, but just go crazy. And so that's also something that I love here in Silicon Valley, is this sense of urgency. Everything goes fast. No, there's no tomorrow. There's no time. That's quite American as well, rather than, in Europe. Yeah, I love this idea of Italy, which, I'm not Italian, but it's like la dolce vita. It's just, to yourself, be carried by life, and don't stress. And I think you need a little bit of both. I think you need a little bit of la dolce vita in your personal life, not to go crazy, not to burn out. But at work, you need to go crazy to and again, that's something that comes from here, I think. If not Silicon Valley, at least the US.
I mean, I think Europe has its own flaws in terms of that, right? I mean, so Harry Stevens and some other VCs are trying to, like, I think Project Europe or something, right? Trying to get some founders, like, young founders to build exceptional stuff and, kind of, I don't know if it's a YC Europe version or whatever, right? But I think what I'm getting to is I think there's a sense of urgency starting to come up in Europe, for instance, like Lovable, for instance, right? It's from Sweden, yeah? And building an AI unicorn from there, right? So do you kind of see that changing, right? Where, okay, do you like Europe knows it's playing catch up to the US, right? And, founders there will start to like, model the way they build to the US, or it's kind of inevitable that, the best Europe founders would move to the US.
So I don't think Europe is gonna catch up. I think there are some exceptions. Again, it's what I was saying before with YC at the beginning of this podcast is it's a matter of odds. I'm not saying there's never any great company from Europe, lovable, and we have many. We have Spotify, we have blah blah blah. So there are a few very good companies here and there, but overall, I think the majority will come from the US in the future. There's always these conversations of like, oh, what's the YC of Europe? What's the YC of hardware? And then the answer always is YC is the YC of Europe because the best Europeans, they go to YC and, they build here in San Francisco. And so, the thing is, I think some people don't understand is I'm from Europe. I've lived there. Life in Europe is good and it's too good. I'm from France where you have social security. So whatever happens to you, you're okay. You're going to get treated and healed. You have retirement starting, I don't know if it's like 64 or something, which is very young. You're going to get the money from the government. And you have the best food in the world. You have the wine. You have amazing weather. You have so many things to see. You have the beach, the mountain, the everything in 1 hour train ride. Life in France is just too good. And that's why when I have, every time there's a French YC founder, of course, I know them and talk to them. I ask them this question: are you going back to France? Or to European founders, are you going back to Europe? Most of the time, if they say, yes, I'm going back to Europe, and maybe they have, like, I remember 2 YC founders, both of them French, and they said, oh, we both have husbands in France. So we're going back to our husbands. And I think one had kids. Of course, like, you're not going to abandon your family, but I didn't invest in them for that specific reason because Europe makes you soft. I truly believe that. Again, I am European. So I don't think Europe will catch up. I don't think we have a sense of urgency. Europe has many, many, many political problems. Again, the US probably do as well, but there's a lot of problems in Europe. National security, defense. Again, France is probably one of the best inside Europe, but still, compared to the US, we're very, very, very far behind. And we don't do what we need. The US right now said, okay, we have critical gaps. We need semiconductors in the US. We need more weapons in the US. And they're just doing it. Again, that's parts of what I'm investing in. And it's just moving so quickly. But also because you have, again, this sense of urgency and so many founders, so many entrepreneurs who want to just build. And you have foreigners like me who, instead of helping France, I'm helping the US because I believe the US is the platform that's going to win in the end. So, we're not even doing what we need in Europe for all of those things of national securities and weapons, which might lead to some other problems down the road as well. So again, there's going to be some exceptions. I'm so happy there are. It's good that Europe is not completely left behind. We have Lovable, but in the future, I still don't believe in Europe. Sadly, it makes me sad. I wish Europe and France, my country, was the best place in the world to build a startup. But I'm a realist. I'm realistic. I see that it's not the case, and I truly don't believe it's going to be the case in the future.
I mean, you guys do have Mistral, so
that's true. We do.
Yeah, but I hear you. I mean, to be fair, like, being from Nigeria and talking about like, Africa, compared Africa to like other regions, it's also like a shame, how like far behind, Europe or even the US, right? And the best founders here are kind of, moving.
They're leaving. That's the shame.
If they can, right? So it's like, before YC used to be the place where, okay, you get, the best, like you said, the YC of Europe is YC, right? So in Africa, it used to be the same until like, the recent like, the changes in AI. And so I think, this regions have to kind of sort themselves out, right? Eventually, because obviously with AI, the power dynamics between these regions is only going to get figure, right? You talked about investing, in, I'm thinking that's American dynamism, that's like the branch of like, the industry, like, where the weaponry and semiconductors come to play. In other regions, like nothing like that exists, right? It's just, America and China that has that forward thinking when it comes to using AI or like, pushing the boundaries of, what.
It really is a shame. It really is a shame that people are leaving Nigeria, leaving France, leaving everywhere. People I see here, people come from everywhere.
Yeah.
Like, there's no solution to this. I left. In a sense, you left at least with your work and intellectually, um, and again, I don't know if there's any solution. It's bad for those countries, but you could be sad and mob for them, or you can just act and be part of the change. And I'm very proud of hopefully someday actually becoming probably, I hope, an American, and just being part of a country, of a movement that just is really impacting the world positively. And again, France will never do that, or probably sadly Nigeria would never do that. I mean, Nigeria probably has a better chance than France, so let's hope for Nigeria together.
I have no idea, man. But anyways, I just like talking about, AI and it's all the rave right now, right? And dominating white patches, right? And what's kind of how is, Lobster Capital like staying differentiated, right? When so many investors are crowding, the space, right? Like you said, seed investments are nearly 30, $40 million in valuation. I recently heard something around 70 for some startups.
Oh yeah, I've seen 100. Yeah,
That's crazy, man. So
it is.
it's like, how do you kind of, stay differentiated and attract the best deals as much as you can?
Yeah, sure. I mean, my whole thesis is I back the top 2% of YC startups, really the ones that, emerge from the rest, especially in terms of very strong early traction. So of course, you've got to be able to attract them as well, to have them agree to have you on the cap table. Already YC is very competitive. When you talk of the top 2%, that really is the best of the best, the hottest companies of the batch, the companies that everyone wants to get into. So you've got to make sure you've got a seat at the table. First of all, I can tell you it's not 100%. In the recent years, it's been like 95%. So I'm doing fairly well, but I did
That's
on
good.
paper. Yeah, I think it's. Thank you. I agree. I think it's very good, but it's not 100%. Still, people can say no to anyone. But I think so many things help here. There's this internal YC tool called Bookface where other YC companies rate you, and I have a good rating there because I try to do well by them and help them. So that's already one thing. There's the network and people and the reputation. People hear about Lobster Capital. We talked about the social media. That helps as well. Potentially they knew me from before. And we've talked about me being a founder and how I can help them. So that's something that I tell them, hey, listen, I'll actually help you. Many funds are built by people who have not been operators before. And people also realize sometimes you have a very, very big fund and they actually don't help you that well because it's just a bunch of small bets. If you do well, they're going to spend time with you and do your Series A. If you don't, they don't have
Right.
time with you, and that. So we're a small team. We're lean. We're mean, and I can help them with many things they go through as founders, and then I can showcase them on my social media. They can come on my podcast. I can talk about them on my LinkedIn and X, etc. So hopefully that's a nice toolkit of many, many things I can do for them, help them with my experience, showcase them, introduce them to my network. I have, I think to date, 42,000 people following me on LinkedIn or something. So I can always introduce them to someone. They need to, be in touch with someone at X company in this sector. Boom, I make the introduction. And trying to be nice, trying to be someone you want to spend time with. Remember, it's almost like, marrying someone. You're going to be together for 10 plus years. So you want to, spend time with that person. So I'm just trying to be nice so they like me, and hopefully they want to work with me in the future, and obviously help them. Yeah.
I mean, to be fair, you're likable. I think
I
that helps.
try. Thank you.
Yeah. I think I wanted to ask, the 2%, the top 2% companies you're talking about is in terms of like traction, user base or revenue or what exactly?
I mean, it's not on purpose. It's not very precise because I want to give myself some leeway. So
Yeah.
I still use my judgment there. But yeah, the number one most important thing in this, what I call 2% is in terms of early traction. So really, in terms of revenue, how much dollars have you made in how short of a time, and how fast are you growing? And in YC, there's, call it 150, maybe sometimes 100 to 150 companies per batch. You have 90% of them who do around like 100,000 or less, which is already good, right? But then you have those breakout companies who do 500,000, 1 million, 2 million, 3 million. And yes, sometimes they started slightly earlier, instead of starting at the beginning of the batch, maybe they started at the beginning of the year, like, 6 months, 9 months ago, something like this. But when you have a company that's doing 3 million in a couple months, like, again, we've talked about it, it's very rare, very impressive. And so that's where I double, triple down. That's where I invest in. And then the other thing is top 2% in terms of founding teams. Sometimes you have very amazing, talented founders who've done things in the past that proves that they're going to do great. Again, they're attracted by YC and the YC brand. And so that's also people that I like to invest into.
Okay. Thanks for that. I think just a quick fire questions, because I think I've run out of questions to ask. Just like, what company do you see in your current, portfolio like that will get to, Deca-Corns?
That's very difficult. So I'll tell you, because I've been investing for a long time, I've had several cases of a company doing extremely well that you think is going to be your best investment ever and then crashing. Sometimes it's could be almost slightly dangerous to grow super fast.
Yeah.
So I won't sort of risk an answer here that's going to be recorded forever. I can tell you that I have many companies in my portfolio that have the potential to do so, that I believe very well could be, but I also know the nature of things and the randomness. Like, in order to be a Deca-Corn, you still need a little bit of luck, a little bit of help from destiny or whatever. So I don't know which one or which ones it's going to be. But again, almost all, if not all of them, have that potential. That's why I chose them. And again, the portfolio is doing really well. I'm not exaggerating when I say, when I share the performance with people, investors, etc., everyone tells me, wow, the portfolio is doing great. So let's wait and see. We'll have the discussion again in 10 years.
Great. Still just talking about the current what's it called, YC companies out there, right, that you probably didn't get into, right? Which one would I say hurts the most?
Which one does it hurt the most that I didn't get into?
Yeah.
That's a good question. Wait, I don't know. There's that I really sort of regretted recently, because I was talking with the founder, and I don't know, we had a good conversation. And so I think I emailed him, I love what you're building, but think of me if you're ever raising something, like, I'd love to be kept in the loop. And he said, yeah, sure. I'll think of you. And then a couple months later, they announced a big round and we didn't talk. I didn't know. I think it might have been their Series A. And so this is a company called Gumloop, really exploding now. Gumloop. Yeah, Gumloop, so they say the AI automation platform built for, I lost it on though. But anyway, they're doing really well. I loved it almost from the get-go. Talked to the founders several times and be like, oh, we'd love to be included. And so, that, no hard feelings, by the way, like, life happens but so, that's one that just came to mind. But I want to sort of emphasize that I don't spend so much time dwelling on that, because again, that's, when the portfolio is doing well anyway, so there's always going to be some miss, and some of the miss are going to become amazing companies that I wish I could have, or it could have been, blah, blah, blah. So, and that's okay. That's part of life. Gary says he wants YC to be the tides that lifts all boats. So hopefully everyone does well. Like, the company does well, and my fund does well, and other funds do well. Like, it's not a zero-sum game. So, if you miss a company and it does great, I'm just happy for them. Like, I'm going to do great regardless. My fund is doing well. So I'm just very happy for them. And that's what I say to founders as well. Sometimes I say, I'm not going to invest. Most of the times you say no more than yes. But like, I wish you well. I hope you prove me wrong. I hope you build an amazing company. And again, my fund is going to do great regardless. So, after investing for so many years, doing so many deals, you sort of learn to detach yourself a little bit.
It just occurred to me that we talked about your fund a lot, but we never mentioned, how large the fund is, AUM, or, check size or ticket size or whatever, right? So I think it would be a good opportunity, right, to kind of touch on that. So I understand you have the first fund and you're kind of raising the second fund. And so from the first fund, like, what's the size? Or are you investing across pre-seed and seed? And I know you mentioned a couple of industries, right? But, just if you can, just kind of pull all that together.
Sure. So before the first fund, I was doing the angel syndicate that we mentioned with the YouTube, etc. So that's $36 million AUM that was raised and deployed and invested in startups, mostly YC. Then, so there's been fund number one, Lobster Capital One.
Was that from France into YC?
The structures were, so it was mostly French investors at the
Okay.
time. I would, the YouTube channel was in French, so it was really sort of my network in France. Some of those investments came from French entities, but then most of them we did SPVs in the US, similar to what you can see on AngelList. We're not using AngelList, but it's the most famous one that everyone knows. So you can have French money or from
Yeah.
anywhere in the world go to an SPV on AngelList. So then it's American, and then it's invested in the startup. So that's how we did this. So then I built Lobster. Fund one, I raised it in 23 and 24. It was intended to be an 8 million fund, rather small. I oversubscribed it to more than 12 million, 12.2 or 12.3. So quite a big oversubscription, but still relatively small, I would say, in the world of funds. The check size for the fund one is 250K. It's almost fully deployed now. And so I'm hoping to raise a second fund that I'm not really allowed to say too much about, but I'm hoping to raise a much bigger second fund. I'm targeting 50 million. And I mean, I'm saying hoping, like, it's going really well. I'm working towards that goal and it's going really well. Yeah, that's pretty much the numbers on the fund.
You subscribe on the other one too. Because I mean, to be fair, right? 8 4 4 10 is a very good first fund, like for the first time when you're a fund manager, right? So I don't think it's small, right? 50 now is like, yeah, that's the big leagues. For you're a solo GP, right?
I'm a solo GP. I've built a team, around me, and of course for Fund Two, I'm growing the team. So I can't, obviously, I can't do everything by myself, even with so the team is growing, but I am a solo GP at the head of this. Yes.
You know Elliot Gill?
Edit Gill.
I think Elliot Gill.
Edit Gill. Okay.
He's like a very popular solo GP, right? So that's the person that comes to mind, right? When I hear about like solo GPs. I think he's raising a $1.5 billion fund.
Oh wow. Okay, impressive.
I don't know how he's solo though, right? Because I mean, at that size, you should have a team, like a big ass team. So I don't know how.
That's again, there's the face of the company, and then there's the team behind it. I mean, it's the same with me. Like, if you see all the content that I put outside, it's online. It's mostly in my name, but it's not all from me. Like, I mean, it's all from my brain, but like, it's not me doing everything, posting everywhere. Same for him. It's the name is L.A. Gill, but I'm sure there's a big team behind it.
Right. Who are your like favorite investors to like invest with across like your YC companies?
My favorite investments across my YC companies?
Oh, investors, right? Co-invest.
My favorite co-investors.
I also I think that tells the kind of follow-on access you probably have to, right? For some of.
I mean, we co-invest. We were lucky to co-invest with the very best investors of Silicon Valley, again, because YC and the hottest in the YC batches. So, we've co-invested with GV, with Bessemer, with Initialized. I've co-invested with Paul Graham a couple times. Like, we co-invest with really some big names. I think a fund that I like particularly is Initialized Capital, because it's aspirational for me. We share a lot of similarities. It was started by Gary Tan, investing mostly, if not only, in YC companies at the time, just like me. And his first fund was very small, I think 13 million, or mine is 12, or maybe he was 8 million, like very similar range. And of course, now it's in the billions of AUM. And Gary became, a CEO of YC. Not that I aspire to be CEO of YC necessarily. If they offer it to me, we'll see. But and also Gary built a big YouTube channel, a big, online presence. And I'm pretty sure this online presence helped with fundraising and the success of Initialized, and probably, I'm guessing, helped him becoming CEO of YC as well. And it's helping YC now. Like, the YouTube channel of YC, since Gary arrived, is really exploding and growing and publishing a lot of content. Again, I sort of see myself in all those footsteps. I only wish I can do as well, right? Because it's an amazing success. So if I do less, that's fine. But many similarities and very inspirational for me. So I love investing in co-investing with Initialized. They still do a lot of YC companies. I think they pick quite well. I think they just did someone.
Yeah, return zero entropy.
Yeah, exactly. Zero entropy. That's exactly what I was thinking about, that you just had on your podcast. And that I wrote a small check in as well. And so I'm very happy to co-invest with them. Yeah. So, but there's many funds that do well by YC that I'd like to invest with as well. But Initialize, again, inspirational for me for what I hope to build.
Fair enough. I just remembered also there is this other firm from the last couple of years that also backs YC companies, Pioneer Fund.
They're built with only YC alumni. They really are sort of the YC network. Yeah, it's a great fund, and we have many differences that I won't get into here. But of course, great fund, and I end up co-investing with them quite often as well.
Oh, great. All right. And, what's the vision? I think this is the last question, right? The vision for Lobster and the next, I want to say decade, but, you talked about the returns for VC firms reducing because of the pace of, the pace at which, some of these companies are going. So I would say maybe half a decade to a decade, right? With the strategy that you have, right? Yeah, I think that's it.
Yeah, I mean, first of all, I want to prove that this thesis is correct. You ask me, it's legitimate to doubt this is the right strategy. People say, maybe you're lacking conviction. We talked about this, or it's too high of a valuation. So my goal is to prove that this works. I believe in that strongly. Again, I've explained here why, because of the math and the odds and et cetera, and the portfolio construction. So I really want to prove that. Again, I have many people who believe this is true. They're my investors. But I really want to prove it with numbers and say, hey guys, this is a strategy that we bet on. This is and it's I'm not hiding anything, right? Everything I shared publicly, like, my strategy. So I want to prove that this works. And then I want to really grow the social media, catch up to Harry Stebbings. I think he's well in front of me, well ahead. Just keep doing great content, do more, grow the content team. And just, the content is really helping, hopefully, founders navigate the YC world, but also helping investors and LPs understand the VC world, just do more content. And, if in 5 or 10 years or 8 years or whatever, I'm in a place where, the returns are there for the fund, the results are here, and I've made a lot of money to my investors. And, the content, it really, really is doing great. And we're becoming sort of, today we're not top 5, top 10 content on VC, a startup in the world. When you think that's where I want to get, if I have those two things, I'll be the happiest man in the world. And very likely this means the fund grows a lot if the results are good and the social, the online presence grows. So very happy to have the fund grow, but that's a result of what I want to do. I really want to have great returns for my investors and grow the social media. The result will likely be the fund grows, but that's not the goal in itself.
Thanks for that, Gabriel. And I think this brings us to the end of another episode of The Upside. Really, really appreciate you taking the time
Thank you.
to share your journey and, strategy with, our listeners. And hopefully I can come on your podcast sometime.
Yeah,
yeah. And I'm happy to, stay in touch and keep in touch. For listeners out there, as always, you can find this episode and on YouTube and Spotify and across our social media pages. If you enjoyed it, obviously I did, share with a friend and leave us a rating wherever you listen to your podcast. Yeah. Thanks again, Gabriel, and see you around.
Thank you. Bye, everyone. Thank you so much.